Alright, what's up everybody? Ooh, market starting. I'm a little late here. Let's go. Good morning, good morning. Smash that like button. First thing you do, make sure you guys get into rocketscooter.com. Check out the trial, free trial of the software. You won't be disappointed. Check it out. On to that. Nasdaq opening irrational right out the door. Let's go ahead and pop this up. Oh, we're not on Twitter Spaces this morning. Oh, how about this? I'll turn my lights on here. Hey guys, what's up? Good morning. Ugh. All right, let's go. Okay, so let's do the screen really quick. You can see right out the door we have all the three checks that we do. We have irrational Nasdaq right out the door, so all three of the indices are irrational. So market's kind of a little crazy today. Remember, the irrational side is if you're outside of the band on the downside. We talked about this yesterday. We don't expect the market to make its way to the upside, so people in this kind of trades understand that. I'm gonna watch it today. We'll pull up Rocket Scooter and get the calculations. VIX is cool. VIX is pretty cool, so nothing bad there. No market catalyst that I can see just yet. This morning, let's pull this up today. Nothing today. Wait, today's Friday, right? Oh wait, I'm stupid. Don't listen to me. Today is Friday. No, nothing today. Chicago PMI, maybe. I would say probably not too big of a thing. Okay. Okay, guys, don't forget to smash that like button. Good to see you guys all here. So Rocket Scooter out the door first and foremost. Let's see what we got. Alright, so today we have a barrel long up on SPY. Let me pull up the liquidity map here. Just as a reminder, BRLU has this particular setup. I'm looking for hedge pressure interactions back to open. So this is what this looks like. Where the market opens, looks like we did gap down from yesterday. So open, bottom, back to open, right? So it's very small move on that particular movement just took place. Open, back to there. The open is support, then we move higher with resilience less than 0 through 82 is the top. So today, my call for today is this. There's that V-shaped move that's there with resilience less than 0. That's about as high as we go. And we're either in there. And be very careful watching out for that. This is a very bad break. So this is res greater than 0. We're required to go through here, and then you're trapped. Liquidity pocket there. This is the end of the day. Right here, 83.50. Any questions? Morning, guys. What's up? What's up, guys? Drink that Celsius too fast. I'm not crying. You're crying. Whatever. Okay. So that's basically it. The res is very negative, so this is what I expect today. Inside of here. So if I were playing the game, what I would do personally, if I were trading this today, I'd be on the sell side today, sell call side, way up in here, above beating band, and then I would buy calls there if I would do a credit spread in case we broke out. So buy calls, sell calls, way up in there. This would be above DD band. Resilience less than 0 hints that we're going to be down here. So let's run Nasdaq really quick. Simple as that. Okay. Music is greater than Matt's voice. Oh yeah, why is that shit so loud every day? I swear I turn it down every morning. This is my brand new computer, by the way. Have you guys seen? Have y'all seen my new computer? This is the best computer I've ever built. Well, I mean, every computer you've ever built, I guess, is the best computer ever built, as long as you're buying new stuff. But this is the most amount of time I've ever been built into a computer. Sound settings. Let me see if this... Did this turn the... I need to actually... Oh, you know what it is. I know what I need to do. It's not saving my system settings when I do that. Okay, there we go. What? Is that mom's padded iced tea this early? You know it. Actually, to give Mom's patent, I see Mom does make some kick-ass iced tea. Not coming from a southern Louisiana French Cajun family. So, you know, make that front porch sun-cooked iced tea that sits on your porch all day. Ooh. Grab some of that and put a little vodka in it. Give it some zip. All right. Let's go QQQ. All right, let's do UVXY, just see if there's any kind of interaction points through here. So one of the things in irrational markets is if UVXY interacts with the bottom of the bull zone, be careful there. This creates volume right here on the edge when you touch it. Anytime you touch it, irrational turns on until you get out of the band. Still loud? What? Really? Okay, what's everybody doing for New Year's? Y'all have anything fun going on? Gotta let the boys know about this. There's a bug on that. Okay, let's run the scanner today. Let's get some plays out. So we're going to say that we're going to have some bearish setups today. Let's just look for these and find some scalps. Distance from hedge pressure, let's pull them up. Coin Nike, okay. So what I do in situations like this, any stock that opens below monthly hedge pressure, right? Any stock that opens below monthly hedge pressure is bear mindset that I have here. Now this is far away from this for me to find an actionable play. So what I'm going to do is I'm going to find some that are distance from monthly hedge, and also I'm going to add the parameter to the strategy side of below monthly hedge pressure, just like that, and then find ones that are right up against it. So you can find some plays today. The DD number is 0.47. Let's talk about that really quick, actually, before we go forward with this. So those of you that have watch lists, right, that look for bull and bear stocks, anytime this DD is greater than 1/2, it's bull bias on the index. Anytime it's less than 1/2, it's bear bias. So it's definitely bear bias today. So I'm not looking for long plays. Today is going to be a short play setup, right? So Rocket Scooter Scanner, you guys can have access to that same thing. This number is very important to our strategy. So I'm going to be looking for stocks that have that really nice little bear setup there. So back to this one right here. What is the rule? If you guys can recite the rule just for your own knowledge, anytime you repeat something, it helps you remember better. If that number is less than 1/2, it touches the lower band once on any of the 3 indices. The first one that touches completes the circle. So the lower band was touched one time with DD less than 1/2. That is our rule. And look at that high volume pivot right there. Boom, boom. Our indicators predict high volume, and that's it. We don't use any time, historic time, multi-time frame, confluence, all those scam words trading gurus like to use. We don't use any of that stuff in the technical analysis. We show you where the market makers are, where the institutions are, and we just trade off of that. So these high volume pivots, the DD less than 1/2 means that the market will likely touch the lower band in futures before it touches the upper band, and that has been completed. Puzzle completed, way to go. There's that predictable high volume, and so now the market's looking pretty booty. That's an official word we do use on Wall Street. We do say booty. I'm gonna look for stocks that are below monthly hedge pressure, which means they maintain that bear structure in that bear market, and then I'm going to find ones that are right on the edge of monthly hedge pressure, so I can get some of those that are actually right here off of this yellow line for the short. I'm going to hit something that bounces off of it. So we had some things today, and they're actually already done, have tapped, and they're all moving. So bear long up says longs in play off of hedge pressure. No, it doesn't mean longs in play. We talk about this every day. This is liquidity map. This doesn't pick direction for you. That's the whole point of a map. The market makers, if they can predict the stock market, they predict direction right every single time and never get it wrong. It's just showing you where buyers can be and should be. And when you get there, there will be a volume spike. This just shows you exactly where volume spikes are. And this is going to tell you that historically, if there are buyers here, the market maker raises price, then they're going to go to there to find the sellers without a catalyst. That's all that it means. It doesn't mean it gets here and it's going to go to there. Most of the time it does. A lot of the time it doesn't. A lot of the time it'll hit it and break. Every stock has a different probability, but what it means is this is the long play if the long play works. So BRLU doesn't mean that there's a long play off of hedge pressure. It means that if you open and you fall and you open above hedge pressure, the buyers will be at hedge pressure if they exist anywhere. So if I'm longing, I'm only longing from there to there, and that's it. If the opening price is support and we move higher than the open price, then I'm chasing along to the next resistance. So this is a tiny little V-shaped trade on that bear long up. Okay, you have to be very careful reading that. And that V-shaped trade is literally here. We opened, hedge pressure, back to open. That's it. That's that line. That is that line. You see that? And then it says, if you supported the open, you trade to the next resistance. Well, here's your next resistance. Resilience is less than 0. You got to pay very close attention. Okay? So liquidity map, while that is pretty cool, right? It does, okay, it's like, okay, it is predicting market. You can't say that because it's not really doing that. It's showing you where the buyers will be, but you can't predict that they'll overpower the sellers there. That's the whole point. Do we understand? It's the best you can do. I mean, it's pretty damn good at that, but it still, you have to trade. It's not telling you it will go there, but let's map it out, right? If you open above blue, hedge pressure, and you're selling off, then if there are buyers, they'll be at blue. Well, here they are. Here's a little bitty bump right here. Then if they overpower the sellers, then it comes right back up to test the open price. That's it. This is this trade right here. And there it was. Boom. Then it says, you know, if you open and support the open, then it goes up to next resistance. Okay, so this had me thinking of that. And it's the first thing I said in the morning. I go, ooh, next resistance. Okay, well, I just look at all of them. We have a half gap. We have a liquidity pocket. Which one's more achievable? And then from here, I go in there and I go, okay, well, resilience is less than 0. So the next resistance is 382. So it likely does that, and that's exactly what I drew. So it doesn't mean that, you know, I predicted it, but I that's the higher probability move, and I did draw that. So I said it probably goes there and goes like that. So the idea is that if I'm a bull, it's not just because, see, technical analysis poisons everybody's mind into thinking there's an up, or like there's a predictable way to predict the stock market, 0% chance. I made a post on YouTube. It's going to sit there for 50 years and nobody's ever going to respond. I said, if anybody has a technical analysis system or algorithm that automatically trades the market using technical analysis that can show a 3 or 5 year broker statement, post in that thing right there. And nobody's risen to the challenge. Like, nobody wants to show off. It's so odd. I'll give them free exposure, publicity, everything. It doesn't exist. So the idea of predicting the stock market is really hard. You have to understand that while we can predict where volume will be, that's easy. I can tell you where buyers and sellers will be all the time. I just can't tell you when they get there who's going to win the skirmish, and nobody can. And so you still have to be a bull or bear based on multiple factors, mostly fundamental or bigger factors. Like what we do is we use 15 different indicators to kind of get an overall arcing view of different mechanics, hedging, other things. So today, if the trade I would do today is if you break through hedge pressure, and you're rational to the downside, is I'll be selling credit spreads on the upside. That's it. So what I do is I go here. This is exactly how this, and so what we try to train people on is some of the better ways to trade is not picking direction or trying to not predict the stock market, is assuming you can't, and then trading in the realm of you can't predict the market. So instead of being bullish or bearish, you could be neither or both. So at the bottom of the doomsday band, I'm going to tell you, we did this technique, and I'll do it again. It blew everybody's minds yesterday when we showed y'all. Everybody's like, whoa, we didn't know this was such a thing. When the stock market is down here without a catalyst, okay, almost never will it be above this green line. So the sell side of options exists outside of this band. I'll show you guys really quick. I want to go through this. Here's what the doomsday indicator is. There's 2 different parts to it. The first is this band, and we're using Thinkorswim right now for it. It should be in our platform in about a month. What this band is basically how much the futures will drift away from the expected open of the stock market overnight. This is based on margin requirements in a program called CME Span. And what it does is at the close price, there's an expected range where the market will likely find hedging. Beyond these bands, we set this when the futures market closes. And this helps you predict everything from S&P to stocks to whatever. It's very good. The futures will move overnight because other markets are moving overnight. Simple as this. The band is fixed. Anytime you're outside the band, we call the market irrational. And boy, that is really hard to follow, right? Anytime you're inside the band, it will likely interact with one of the sides. That number that we give you at Rocket Scooter, right at the top right, this number right here, where I'm circling, it's a green number in the top left. When this number is greater than half or less than half, we have rules in our Discord, and if you go to our bots in our Discord, by the way, everybody, if you don't have access to this, go down and check it out. I want you guys to get all of our tools and rules. They're all here. Go to this Discord really quick. The rules in there will show you that if this number is greater than half or less than half, these are the two rules, okay? That if you are in the middle, if that number is greater than half, you will touch the upper band, below the lower band, in the high 90% time. That number is 0.47, so you will touch the lower band before the upper band. So there's a bias indicator right there. That indicator is actually the sum, and I'll go back to how that indicator works. It's called DD. It's a nickname for Doomsday, some goofy name that someone in our community came up with, and we never changed it. So SPY is on the bear zone right now, which means SPY is opening in territory where it previously was bearish and there were no bulls. So what this is it counts all the stocks in the S&P 500. There are three different ways we exist in the market. You're either liquid or illiquid bullish, illiquid bearish. Okay, bull zone is where there were bulls with no bears. That's illiquid bullish. Bear zone is where there were bears with no bulls, illiquid bearish. So it's bears against market makers and bulls versus market makers. What we do is, this is showing you where market maker options are distributed. There's a special thing market makers do, and our algorithm tracks that and now drives their risk to show you the real bull and bear side of the market. We're like the first in the world to crack that code. It's brand new data that's only been around for less than 2 decades to the retail side. No trading platform has ever decided to go in there and find this obscure data and start chewing into it to get these answers, because people didn't understand how the market making systems worked, and we do. So as we created this, if stocks are in the bear side, you're in bear territory. Bull side, you're in bull territory. The third way is balanced, where everyone's losing. Let's call this mean reversion or equilibrium or liquidity pocket. Perfect balanced market exists right here, where everyone's losing to the market makers. So inside of here, when this number is a ratio of the number of stocks in the bull zone divided by the bull zone plus bear zone. And it's not just the number of stocks, it's the total market cap. So it's each stock is weighted by its market cap. So it is the percent of market cap in this ratio that's bullish versus bearish. We eliminate anything that's flat and inside a liquidity pocket area, because it's just going to be choppy and make your data noisy. So if you eliminate all the balanced stocks, the ratio of imbalance or illiquid bull to bear, that's that. So it's a bull to bear bias ratio of illiquidity. Illiquidity is what causes directional movement. And this being less than half, there's your directional movement. So Rocket Scooter alone provides you tools that do not exist. We've invented every single thing in this platform that we give to you. Plus we give you your basic technical analysis stuff too, if you want to do regular charting. So first and foremost, with this number being less than half, there's a bunch of things you can do with it. First thing we do with that is, if I had a watch list, like say at the night, overnight, I put together a watch list. I had like 20 stocks that are bullish, 20 stocks that are bearish, or your trading community, your trading guru has like watch lists. When it's negative, I throw out the bull watch list. I don't look for long plays anymore. I say, okay, now the bias of the index is short. Let me find some short plays. Right? I'm going to find things that are with that bear bias, and you can see that today, if y'all rewind the video, I drew that, and I drew that was probably likely. And out the door, that was not based on just liquidity map, but liquidity map plus this. The bear bias is really strong. Resilience, this is a gap fill predictor. So if this guy is negative, the half gap is resistance. Just like we said, if you rewind the stream, that's exactly what we said as well. So now when you add it all up, now I'm going to say, okay, the direction. So somebody was saying, Boz was saying, so BRLU says longs in play. BRLU says there could be buyers there, and there were, but all the other indicators are indicating that the sellers are likely the stronger play, which is why if you rewind from the very moment the market opened, this is exactly what I drew. And I said the highest point of the day would be here, the highest probability, and that's the end of the day. Rewind, this is what I drew. So the combination of all that is where I come up with the whole plan. I look at all of them together. So once we're below hedge pressure today, we can go short on SPY with buying puts. That's what you're asking. Okay, so number one is I can't give you investment or trading advice. When you say we, there is no we in trading. Trading is a one-on-one or one versus all game. So when you say we, you might just mean you. So if the market is selling and you're going to buy puts, you're already missing the opportunity. So this is an example, not a trade idea. If you wanted to buy puts, you do what I just did, and then you bet that that happens, not jump in as it's happening. The point of the trader is to do what I did this morning. Literally rewind the stream. Can I do that? Can I? We can rewind the stream, right? Let's play a game. Let's go here. Watch. Let me walk you through it. So everybody listen up for like 2 minutes, okay? I'm gonna show you a trick. This is what you're going to do. If that's what you want, you need to bet that it happens. Can I rewind? Okay, you can. All right, let's get a little bit of like. All right. You want to play a game? This is called Let's Learn How to Do a Trade Plan. All right, we're gonna get like a little meta here on this. Let's close the chat down now. I want to pop out chat. Okay. Theater mode. Okay, good. You guys see on my screen? Okay, ready? Ready? All right. Boy, my hair looks horrible today. Get a little fluff there. Hey, boy, how's it going? How you doing? Looking handsome there, but your hair looks fucked up. I'm gonna get. You want to invest in a hairbrush, brother? All right, let's go. So this is what I did at the start of the day, right? Okay. Volume's off. Okay, so what I did, I looked at Doomsday, I looked at Resilience, and watch, and I draw this, okay? So it's, okay, there it is. That's where I drew it before it happened, right? Okay. It's likely gonna hit here, come back here, jiggle around, and fall. Look at exactly that. All right, so how did I do that? Doesn't mean I was predicting a damn thing, but if you wanted to buy puts, you bought your puts right here. For that to happen, not as it's happening. You see what you want to happen, then you make the bet at the most advantageous point right here. Actually, I can switch dark mode on my entire on YouTube as well as my whole desktop apparently is in dark mode right now. So, does everyone see this? Dimitri? This isn't the time to buy the puts. As a trader, you want to see something before it happens, which means while everyone's buying the dip, right here is where I would buy the puts. There's no put buying from here, in my opinion, on a trade I'd make. But if this is what I piece together, so if you guys like the stream really quick, boy, that's an ugly look in my face. Oh, is that when I was choking? Oh, that's when I was choking on the Celsius there. Okay, so you see that I made a, and if you guys have not subscribed or checked out the Rocket Scooter platform yet, these 3 tools are how I do this for the index. So the idea is how I trade futures as well. And I trade futures is that when the market goes to here, I'm building my short from there if I wanted to short to go down here. Now, in general, scalping futures would be a sit-out day because we're irrational. So in the scalping and day trading world, I wouldn't, even though this was a really good call, right? Literally exactly as it happened. Every leg from it holding flat, chopping right there to breaking and testing. These little three squiggles means breaking and testing. Even if I'm 1, 2, 3, 4, and 5 plays ahead of every single thing that happened, I still wouldn't have traded it. The risk and reward wasn't there. Market's irrational. On the scalp side, I sit out. As I said today, the type of trade that is very probable is selling a vertical call spread to bet that you don't go in the money up here, and I example that with the DD band. That's all you're doing is you're trying to predict market behavior, but you can't, but you can build a really good case, right? And so the combination of liquidity map has the two things. Here's the V-shaped trade. If you support at open, look where my mouse is, support at open, it goes to the middle. Now at half gap, I make a check. Are we going to support or break? Well, resilience is very negative, so I'm building the case that resilience will show that half gap is resistance. So it's likely sandwiched between here, which is why it floats in the middle, and that the probability was higher that it was going to break. And if resilience went positive, which is what this shows, it would go up here and end of the day. So with resilience being negative, this is a high probable move, and that this is more likely than this. So because of that, the market, even so, no matter what it does, is likely just sandwiched in here or breaks lower. Instead of buying puts, I take the not bull side of the trade, and I example a vertical credit spread where I would buy calls here in case we went bullish, and then I would sell calls way upside out of the doomsday band. I'm about to blow your minds with this particular technique. So I would sell calls on the S&P way up here, 393, 394, 400, 5, 395, whatever, on SPY, way outside the band. And I would buy my calls here just in case we break out and go in the money on a catalyst. For the credit spread, 0 day. For the sell side, because you want to bet that it doesn't go there today, and that's it. So on the sell side, always 0 day. I'm going to bet that it doesn't go here today. Tomorrow is a brand new environment. So I'm going to show you why I picked 0 day on the sell side. It's very simple. So we're gonna play a game here, all right? And I want you guys to do this. And if you like what you see here, let me tell you a study that I read. There's a study that some mathematician put together on technical analysis and trading. I promise it's out there. I haven't been able to find it since I saw it, but the news made a little expose on this thing for a while. And basically what it said was that people who... It said it went over like money managers, and it said over a 3 to 5 year period, all money managers break even. Number one. So there's no magic sauce to the stock market over long periods of time. Like all money managers typically either lost money or miraculously broke even and followed the market. Number two is another study said that all technical analysis, all of it, had a 50-50 probability of distribution of correct and incorrect guesses, which means technical analysis is just a verified coin flip, literally a coin flip. It makes no prediction and no combination of it, therefore can make a prediction. There's no whole is greater, there's no Descartes, some whole is greater than the sum of the parts. No, if something has a 50% probability and you add it to something else that has a 50% probability, the guru scammers call it confluence. Confluence is another word for scam. 50% probability plus 50% probability doesn't equal 90% probability. There's no magic recipe of two things. So everything, they said all things including VWAP were a 50-50 coin flip. All it proved is that the shape and direction of price can't predict the future of the market, which sounds kind of like logical when you really think about it. It sounds kind of stupid to think the other way around. So you as a trader only make money by trying to figure out what you think is going to happen before it happens and then make the bet before it happens. If you're waiting for indicators to give you a signal, you are already too late, number one. Number two, that signal already is delayed on top of you being late. Number two, it's delay on top of delay. Anytime you see this And I love looking at this. I want you guys to do me a favor. Go into Discord. Find somebody's like algorithm. I always see these things. And let me tell you the telltale sign that something is completely scammy. You will see somebody's... I see them all the time because, you know, I'm a trader, so my YouTube ads are always like, check out our algorithm. Algo this, flow that, blah, blah, blah. And it always has some kind of like thing that's drawing on the chart. And the buy signal is there, and the sell signal is there. Okay? Anytime you have inflections in the market, which are here, and your sell signal is after the pivot, and your buy signal is after the pivot, they show you something that has moved far enough that that makes a profit. This is 100% guarantee that's built off of moving averages. That characteristic delay is built off of some kind of moving average, which means this thing is packed up with all kinds of junk like moving averages, stochastics, MACDs, etc. It's all the same crap. Your signals will come late. So I see these all the time. So when you're waiting for something to happen, then you jump in, you're late to the party and you're going to lose. That's how traders lose with that system. So the idea is that you want to have some kind of way to try to predict what you think is going to happen, right? And then bet that it happens at the best spot. Well, if I think this is going to happen, then the best spot to take a short would be somewhere up in here. Now, do you understand, Dimitri, as an example? So it's not, okay, I broke through hedge pressure, let me buy puts. It's, I'm expecting this little bitty scalp from here, maybe to there. So at this here, right here, then I would, from that point in time when they're very cheap, I would buy puts for here. Okay, so that's how it works. So the goal is to map out where your treasure is going to be, and then right when nobody's looking, then you strike. Okay, so that's how this works. Now it's different because you guys are all trained and used to seeing indicators, and you're waiting for the indicator to signal you to make a play. Rocket Scooter is going to be the first place in the world that's going to teach you how to draw and map out the market with a bet. Now, it's no guarantee it goes there. It's a high probability that this could be right. If it goes down, that's exactly how it would go down. But there's no, I have no idea to say that it'll do that. It could go up in any way or go down in any way. This is the best I can do with the knowledge I have. And just so happened, each one of those inflection points I got right. But look at this. It's not crashing through here and crashing out. So, you know, at hedge pressure, you can't predict who's going to win the fight. But you can predict there will be high volume when you interact with hedge pressure. That's a guarantee. This is the maximum order flow predictable of market makers hedging these sold options to these bulls and bears. Or these market makers, sorry. I can determine NMHP touch is probable. It's very rare to break risk interval and plummet. You need UVXY to behave. Sam, I would agree. The market doesn't like to become irrational. There's usually a lot of hedging at the edges. With DD, you can determine the bias of hedge pressure, and you guys are nailing it. So the idea is that we're using a bunch of other indicators to build that effective bias. So the three things that are so useful right out the door with Rocket Scooter. The first and foremost is resilience. This right here is the rate of implied hedging of all stocks filling their gaps. This is a gap fill predictor, and it's really good at what it does on the SPY. So half gap is the halfway distance between, let's drop it here. This is a really fun exercise as well. The three indicators that literally make Rocket Scooter membership worth it, because we invented all three of these things. You can have these indicators for the rest of your life. It's literally, for the entire platform and all your data feeds, is literally $100 a month, half price. It's half price to $200, which means in the future, when we add all the other stuff we're adding, you can get everything else for free with no price raises while everyone else is paying $300-400 a month for all the features. So the reason we're growing so fast is people are like, wow, I already have TradingView and I always pay data feeds there. So yeah, I get all my data feeds for free with you guys. That's correct. We built into the price. So you get free all the data feeds. We're gonna have options order flow, options data feeds, unusual options. All that stuff is coming in our platform. You'll have all those data feeds for free. You can buy the indicators as part of the platform. And so these three things I use for anything from futures, options, stock trading, even investing. Okay. So the first thing is to understand resilience. This is the open price today and the close price of yesterday. We gap down because this is half gap. It's just the halfway point inside of here. We call this the redistribution zone. So there's different ways I trade each one of them. In scalping futures, I love scalping in the redistribution zone, as long as markets are rational. Today they're not, and we'll talk about that later. So today is like a no trade on scalping day. And scalping today is going to be a pain in the ass, I promise. There's not a lot of run. If you get resilience flips positive, then I might long the market from here to there. But I don't have any indication that's going to happen. So one of the things is that resilience pivots the market from here to there. That's all it does. Greater than zero, less than zero. This is the total market cap flux of all stocks in the S&P in the same redistribution zone. If Apple is up here in its own redistribution zone, then the algorithm expects Apple to close its gap out that way before it closes its gap out that way. Closes the gap means you touch the open or close price. So Apple has a certain amount of market cap that fluxes this direction. The S&P, therefore, if Apple hasn't moved there yet, the S&P will likely, if Apple hasn't moved there yet, it will likely move there before it moves there. So there's a certain amount of market cap flux into the basket or raise in price of Apple. So therefore, the S&P should theoretically be valued a little higher than it currently is, because that Apple move will eventually be priced in. So the algorithm does that for all the stocks, and then this is the flux indicator of the amount of market cap flowing in or out of the basket. But what it is it's moves that haven't happened yet, and that's the beautiful part. It was our attempt at creating a leading indicator. So in the middle of the redistribution zone, these blue lines, if anything's at its halfway point and moving higher, it's almost like, again, 90th percentile that will go here before it goes there. Because if markets are raising price, it needs to find sellers in the open and close, are the biggest buffer of buyers and sellers. It's like a market maker scalping trick. We have a 30-minute video on it, and it's pretty badass. You have to watch it. So the idea is that if Apple hasn't moved yet, if y'all understand that, I mean, that's pretty cool, right? If Apple hasn't completed this yet, then the S&P is like, ooh, well, just S&P's holding flat. Our indicator says the S&P is actually going to be valued here, because that Apple move will price in, and it's the weight of market cap as well. So when you add up all the stocks in the redistribution zone, this is the rate of implied hedging. If it's negative, it means the S&P is overvalued at this point in time relative to the value of the stocks fluxing. So with resilience less than zero, all that it means is if the S&P is in the middle, then this tie breaks the S&P zone gap. And that's why you saw that with res less than zero. So as you notice, these tools are very simple on the surface. This is the same thing. We're talking about bullish and bearish bias. This is gap filling to look for buyers and sellers. So when you add up all the different mechanical parts of the market, right? This is like designed by engineer. It's complex under the hood, but on the surface, the logic's pretty simple. Resilience is a leading indicator. Number one, leading indicator, because it's trying to price in things that haven't happened yet. Just like when the market opens, I try to draw this and then say this. What did I do? That. And then I do that. I'm trying to make a guess before it happens. And then here, it's also trying to tell you what the S&P is going to do before it happens as well. Trying to the best that it can, right? So as a trader, the goal is to get ahead of the market. It's not shorting on direction. It's knowing that this breakout can't be trusted. And it's shorting right here. The difference between me and you, if you're just new to trading, is that the question was asked, should I buy puts here? And I'm like, actually, I would have bought puts here. And by the time you're buying puts, you're buying them for me, because I would have closed them out at that point, because there was my trade. So getting ahead is the winning trader. Chasing the trade is the losing trader. Now we get it. Should you pay extra for your bull bear decision range? I mean, people go out there and pay $100 a month for some high school kid to text them penny stock call-outs. Humans in general are just desperate and dumb sometimes. And they'll do anything they can to avoid learning something or committing to learning something new. I'm the same way. I'm stupid and dumb sometimes. Let me figure it out myself. Oh, watch a YouTube video? Pfft, I got this. And then I break it or mess it up, then I watch a YouTube video after the fact. Well, don't do that with your life savings. Don't lose it all and then decide to learn after the fact, right? Lazy. Yeah, we're all lazy. I'm pretty lazy too sometimes. So resilience number 1 is a gap fill swear at the half gap point in the redistribution zone. Greater than 0 goes that way, less than 0 goes that way. Okay, and you saw that behavior here. The reason when I drew this like that when I was doing my little prediction was because I was actually showing you that it was going to likely, wait, where was that? It was going to likely hold up at the open price. That's why I'm holding it right here. So I did like 9 different things in my head, if you see that, right? That V-shaped move, number 1. That breakout, number 2. That interaction with half gap, number 3. The resistance, number 4. The hold up at the open price, number 5. The possible break of hedge pressure, number 6. The resistance and test and fall, number 7. If resilience is greater than 0, it goes up and hits the end, which is liquidity pocket. That's 8 and likely holds here. Okay, so 8 steps ahead. Well, I guess 9 to say it won't go here. I'll sell a credit spread. So the idea is that a lot of what I just did isn't just scribbling on the market. It's me just being very familiar with all the indicators at once. This line being right here is the open price, hugging the open price, which is exactly why I had it hugging the open price. It's a very strong pivot every single day the opening closes. Trust me, you guys will get good at this, just putting all of them together and just doing it for a while. So outside the redistribution zone is another thing. So down here, okay, this is illiquidity. So if the resilience is less than 0, now the redistribution zone itself is resistance. There's 2 different ways resilience works. So in the zone, it pivots from one side to the other. It's great scalping. Outside the zone, resilience less than 0 is resistance against the zone boundary. That. So this is the high of the day now, as long as that is less than 0. So the high of the day to me was set to be here. Now with the stocks just completely being demolished, I've adjusted my high of the day to be there. And it might turn out that would be the case. Okay. So it's just a pretty cool thing. So in the beginning, so this was just telling me there's resistance. DD is telling me that bear bias is good, so that stocks are going to likely move lower. So then I go to the futures market. I go back here to, again, the bottom left. Okay, let me show you guys the cool trick. Did I say it's going to touch the lower band before the upper band? Okay, good. That happened. So essentially, the trade inside of here is probably the only thing that is somewhat predictable. Everything else is going to be, well, it's now New Year's, holiday. It's not a lot to guess from here. I wouldn't try to guess from here. If you were being smart, the answer from here is to walk away and call it a day. But again, do whatever you want. I'm just showing you guys how to read the market like I do every day. Hopefully y'all learn something. If you like what you're learning or like this style, it's a lot simpler than what you're used to. There's no multiple time frames. What time frame are you using? I don't use any time frame. I don't use multiple candles. It's a silly thing to do. Why add 50 charts to my screen? What indicators do you have? None of them. 0. This is pure price action trading. And so you're trying to mimic the behavior of market makers do. You're trying to find where buyers and sellers will be and predict that you can find them at a certain spot. And you're just trading to those spots to where you know there's a likely chance they'll be there. But you can't predict what happens when you get there. Is it going to break? Is it not going to break? You can build a very complex case of a bunch of mechanical features like resilience plus TD plus liquidity map are all mechanical things. but some firm can come in and steamroll over, you know, the machine any point in time. The green bands are something that also are provided, yes, as part of the indication. We just haven't built it into our software yet. So everyone in our group, which is kind of cool about our group, there's 3,700 people active in our group right now, as we are growing like wildfire. Feel free to join the Discord. They make the tools that we have as part of the membership, they make them and share them with each other. So somebody's made a Thinkorswim version of the band, somebody's made a TradingView version of the band. So Hulk, when you do join, just when the members area, just say, hey, where's those bands at? We have to get futures data in our platform to give you these bands. And then we also will take those numbers and convert them to SPY. So ideally, one of the next things would be in SPY, you know, we actually give you these numbers just like that, just like drawn on there in some way. And that's going to be one of the things. It's going to take a couple months to get there because we have other projects lined up ahead of this. But yeah, it'd be lovely to have them printed from the futures and then converted to SPY, right? Yeah, so part of the membership gives you all the indicators. We have 15 different ones. I've shown you DD is one of them. So this is a bull bias indicator that comes with it. It all comes with it. So you get the platform, the charting, even you get your data feeds, real-time data. All it comes with your platform and all the other cool tools that we got. Resilience also comes with it. So this is gap fill. This is positional bias. So the two of them together, right? It's going to tell me while we are moving higher, I don't trust any upward moves. But again, my call at the start of the day was to sit out anyways, right? So markets will be highly predictable, which is why at this point when somebody says, should I buy puts? I go, can't tell you what to do. But I'm like, puts from here to there. And then knowing that from there, the market's a little fuzzy. You can't predict hedge pressure breaks. A very low probability that happens. So my trade would end from there to there. There's not enough risk to reward, so I didn't take it, right? That's the whole ultimate sign of a trader, knowing when it's just not worth your time. So right now is a great example, right? We're rushing up to half gap. And again, being a low volume holiday day, market's going to be unpredictable. Now's the time to watch resilience when you get here. So let's pull up the classic app and watch real-time resilience. Tick by tick. So this is locked into the candle you pick. This is like, we mirror it tick by tick. So whenever the market is starting to move, I love to take our classic app, which is a light version of the main app without the charts. And this is not locked into charting. So while this is the same resilience, this is taking 1 minute snapshots, just like any other indicator. Right? So this is showing you the real updates in real time. I think once a second, you get an update. Every time you get a tick update, it'll update. So I'm going to zoom in right there, right? So make sure you guys go to rocketscooter.com, sign up for the free trial, and play with these indicators. I promise, promise. You will not regret your first month here. You will walk away feeling like you learned something new. Guaranteed. Most people like write me long-winded like, oh my god, this is like how the hell are you guys not everywhere yet? Like, this is so different and so new. It's like, I learned something new. And I said, most people say, what'd you learn? They're like, I learned that I have control and I can sit out a lot of times when markets are choppy. Like, that was my biggest problem, that I didn't know when. I can say if the market's going nowhere, that it's not worth my time. Why sit here and struggle for 8 hours to try to find a play and guess? Like, when I say the market's, likely doing something and it doesn't look like this little teeny range is worth my time. See you guys later. I'm going to go back to bed. Save my energy for tomorrow. That kind of stuff is what we want people to understand. Not every day is good eats. It's true. No willingness to trade. Stop bugging me about. My call was, I'm not doing anything today. Period. And I'm not going to sit here and be like, ooh, I wonder if I have an itch to trade. Zero. Zero, 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 zero anything today. I'm not doing a damn thing for the rest of the day. Zero. If you continually want to like, okay, what about now? What about now? What about now? The market pushed irrational and is struggling to stay in the band. Resilience is less than zero. We are locked in, as far as I can tell, to a range like this with a very, fuzzy possibility that we do lose this for the day. The R&R from here sucks donkey balls. There's no reward for the risk I could take. The risk is very bad on the downside. There's no probability that it sells off. We don't bet on hedge pressure breaks. There's a very high probability this holds. And right now, just the stocks are telling me that people are selling the stocks enough that this is going to resist. Now, somebody could come in and gobble up all the stocks, and that can change my mindset, and which would be the alternative trade as we break from here and then tap that upper DD band or liquidity pocket, and then there's the end of the day. The only thing that's going to draw me back to the market would be if I was here, and I would chase along. I would set an alarm to tell me if we were up here to come through here. And I would get in if the market turns bullish. I would take the long side. I'm not gonna want to waste my day playing with the bear and small probability to sell off. So the lowest probability thing that's going to happen is this right here. So the whole idea with the credit spread is a set it and forget it trade. I would buy calls right here. Literally at that point in time, I would buy these calls. As the market's pressing higher, then I will sell these calls this distance times 2 right there. So as long as we don't go here, then I make all the money on the calls. In case there's that random low probability breakout, well, I'm long from there. And then I go back to bed. The idea of picking a directional trade, should we long, should we short, is the weaker way to trade as a trader. The smarter traders don't have different indicators in their pocket. They have different styles of trading in their pocket. If the market's bullish and directional, you're going to make your 200, 300, 400% on a YOLO call or put that's just naked long, naked short. The correct and probable, I wish Ashton was here today, the correct way to trade a market that you can very, very accurately guess that the market is very likely to stay in this range with a small probability that it goes here, and even smaller probability that it goes there, and basically like smallest chance it goes there. So I can either, so I'm going to draw like a big, so the highest probability is here. So I can either take directional trades inside this teeny weeny range, or I could bet on the smallest probability thing happening or not happening. So the not happening is the sell side. It's not going to go up here likely, so I'm going to sell calls up there for today. And just in case if it does, I'm going to buy calls right there just to protect myself. And then there's the trade. See you guys later. Click the X, go to bed. Ashton's here. So in this particular setup, would you agree with this style of trading, right? If resilience is less than 0, right? So we're kind of sandwiched in here. It's not a directional day. DD is half, so we're likely going to be in that bear bias setup. And then liquidity pockets even here, so this is like that final balance point. So I'd want to be long if we break out to the bull side. So that's the buy call side. Again, this is just educational moments. I'd want to be long just in case the small chance of breakout. And I'd sell calls way out of balance. So the idea is while the market is likely just kind of playing around in here, instead of trying to predict the small directional breakout, why don't I bet that the breakouts don't happen and then hedge myself in case they do. And Ashton Nolan says a call credit spread makes the only sense today. That's what this is. I love when the expert comes in here and tells me that I did something right. I'm still a student. I'm learning from a lot of these folks here. I'm finding out that betting on things not happening is so much easier than betting on things happening. And that's the whole point. Rocket Secure is a day trading instrument. We've all like, okay, it's irrational sit out, irrational sit down, and Ashton is like, you're basically telling me where the market won't go. I'm gonna sell some call credit spreads. You can make money betting that it doesn't do that. Instead of trying to bet that it sells or that it's flat or that it goes up, just bet that it doesn't do that, and then you establish a fixed risk trade. So Iron Condor can make sense, but I don't like putting those on Fridays. Butterfly could be a great play though. So the idea is, if you just think about it like the way I like to think about it, because I'm not traditionally trained as an options trader, but I think about like the positive sign is I want to be in that position. The negative side is I don't want to be in that position. So if I say like, if we break to the bull zone, I want to be long, so I'm going to have a call there. Like, I'm going to go to bed if market does this, market does that, market does that, okay. With the weird chance that we do break to the bull side, perfect. Then I'm long there. And if it doesn't go there, then I've just spent that money on those calls and I lose them. So while it costs money to buy those calls, let me raise some money to buy them. Well, let me sell way out of balance enough of these to pay for these. Even if I didn't establish a credit, I now have a position that this makes money if it doesn't go here, and this makes money if it goes there. So, all right. So I don't even think of like the credit spread or the Connors of Butterfly. I don't think of the names because I hate thinking of like a name and then trying to associate it. I try to actually piece it together. And I like, oh, that's a credit spread. Okay, so that's how I think of trading, as like where I want to be, where I don't want to be. And it's easier to see it like that because when I first started getting the options, I see things like somebody would write down this number and be like, you know, 1, 20, 23, SPY, call, 490. And I'm just like, what does all this stuff mean? Like, I was just so confused with options. It's like all these, there's a lot of nomenclature that you have to learn when you get started. And then you have to learn like 90 different, I mean, there's a million ways to set up synthetic spreads, diagonal spreads. I mean, it's all this thing. But learning them little by little is very advantageous. But really learning like when they apply and when they don't is actually really cool. There's a million ways to make options trades happen. But if you think about like the easiest way to construct them is where you want the market to go and where you don't want the market to go. So right now, this is your DD band. The market's likely going to stay down here more than here. So it's a very low chance that we're up here. So the low, like you can bet directional if you want, but if there's a very low chance of something's happening, then let me bet that the improbable thing doesn't happen. Let's just sell some calls. Now, I don't want to just sell calls and be naked. I can hedge myself by just having some calls right here in case it breaks. So I definitely want to be long anyways if we're bullish. And I'm going to bet that we don't become bullish. My real bet is this guy right here. Sell more of these than I buy of these, and then of course, I've established credit. And that's how I think about it, right? Whatever. If I sell more of these than this one, then it's a credit. Credit is you put money in your account, and debit is you take money from your account. So in an official like definition, and again, I don't think of names. Like I don't think of the names of the options. I think about how I want to trade. And when I say a credit, it means I'll sell more of those than I'll buy it. So I'll establish a net debit of this right here by buying those, and I'll establish a credit from selling those, and the credit greater than the debit, I establish a credit, right? That's what that means. So I don't go out there and buy the options spread like as an arranged buy. I leg into it in these different trades. On a day trade, yeah. For index day trading, I would sell 0 day and I would buy a little bit further out, like one more day out. so that the theta decay slower on these than I want. Yeah. So I don't do like there are specific definitions for each particular options trading style. I like to think of it purely as I want to have the combination of this trade on the full length till expiration to be a credit to me. So I'm going to sell more than I buy. If I bought $5,000 worth of these, I would sell 10,000 worth of those. You can do both of those things. You can buy. If you do it the other way around, I don't like that. I don't like that style of trading. If I were to sell calls here and buy calls there, they have a similar approach, right? Except for this one starts to pay out if you go there, and this one pays out if you don't go there. This one, you're losing money if it goes there, and you lose all of that if it doesn't go there. I think this is completely backwards for this style of bet. If you're trying to define it with like the official definition of some kind of trading setup, okay, but I would not structure a trade this way at all. Because if you think about it, if you end up in here, then you lose both of those legs. This is a major loss. This is the worst thing that can happen. So this structure is like your max loss, right? You lose on both of those legs. You lose all, total loss. This has no total loss scenario. Well, I guess if you rally indefinitely. But these will allow you to close that trade out right here, or you can just close these out too. Yeah. So the idea is like, yeah, there's all these options names. I don't like to use them personally because there's all this confusion, a lot of referencing. Think about it purely as what you want to see, right? Don't go. This trade is a loss there. It's also a loss here because these are losing at a higher delta than these are gaining. This trade makes you a lot more money if it stays here and you get that full credit, if you establish a credit at the start. Staying here nets you a credit, sure. But there's a lot of loss in the case that it breaks out. If I trade this way, this is your maximum gain. Both sides win. No call, gain, call, gain. This is also a gain. Same as this. Gain. And if you break out here, also a gain. Because these guys allow you to be long the market. And these guys allow somebody to buy from you here. So if you close out the trade anywhere inside of here, it's like scalping from there to there. Equal 100 share, 100 share. So any point up in here, you can close it out. You bought right here and you sold right there. Easy as that. That structure is better than that structure, in my opinion. You just have to sell a lot more of these to get a credit because they're further out of the money. These, you can sell less of them to get the credit because they're closer to the money. But the benefit of this is you are selling fewer of these, but you have these max loss scenarios. Whereas when you do it this way, these are all gain. I like this credit. Now, if there's some official name for that style, okay. When there's a broken wing butterfly. See, these are words I don't know. I'm not a traditional options trader. San Diego, we are leaving tomorrow. Coming back the 3rd or 4th, I think. Yeah. Something like that. So you can do both style of trading, but the understanding of the risk and reward between the two is that I have to sell maybe 5 times the number of calls to get a credit that way than here. So I have a lot more exposure to the short side of those calls than here on a share-to-share basis. However, it does build the trade differently to where a breakout is more advantageous. And if I break through these calls, I just get out of the trade that was negative anyways. So I want to be long the market, close the sell side of the calls. The other way around, you're in the money right here, and you need to break out further for you to be making the money on the ones you bought. Yeah, so in the next, when I get back from San Diego in 2 weeks, not the 3rd, but the week after, we're going to start, I'm going to do my YouTube trading challenge. The reason I sell 0 day is because this mechanic changes every day. I want to bet that we don't go here today. That's it. Isn't it amazing that these scammers keep reinventing themselves and relaunching under a different name? I think that's the person that's crying and begging people on their Discord to like their stream. Boo-hoo. Any questions, you guys? See, even people out there that want to sell products still watch our stream every day to try to figure out why we're going so fast. Y'all wanna know the secret? Y'all wanna know the secret? You wanna know the secret of growing any business really fast? Everyone that has a business, you guys wanna know? I'm gonna teach you guys the best business secret in the world. You ready? You just need friends. That's it. And this is a rule of life. Without friends, you go nowhere. You know what I mean? If you don't like you, don't go anywhere. So we got... If you guys are starting anything in your life, friends introduce you to more friends, introduce you to more friends. You learn from people, you grow. That's it. Nobody likes you. You just sit in obscurity, stewing in your own ego, floating around a swimming pool by yourself. Pool party of one. Nobody likes that. Crying and begging people to interact with you. Please play with me. Please. And the best restaurant in the world. My steaks are better than yours, and all the other people that make steaks are gonna be like, this is jack off. You know what I mean? Like, restaurateurs salute each other. Hey, great restaurant, by the way. They don't say I'm better than yours, that you just know in your head. You don't. It's like people never figure that out. What's hedge pressure and how do you know where that is? Hedge pressure? Okay, let's go through that. Okay, very quick. So super quick, bull zone is where in the past people have longed the market with no seller. Seller is a market maker, like no real seller. So trader longs the market here, SPY shares. Long SPY shares, market maker, short SPY shares, and bought calls with it. Okay. That particular trade, there's a bull bought some SPY, market makers shorted and bought calls. That's it. They short the market and buy calls because that trade is balanced. They're just facilitating the trade till they can find a seller. So we find those calls, and there's the bull zone, and there's the market maker distribution. This is all bullish here, all bearish there. So they bought, market makers buy calls from options market makers who sell calls. And they also sell puts. They deal in calls and puts. So the net maximum gamma exposure of just market maker calls and puts sold is hedge pressure, weekly. These are weekly options. Monthly hedge pressure is monthly. So this, when you hedge calls and puts, you buy and sell shares to hedge them. So if the calls go in the money, you're going to long shares 10 for every 0.1 delta. You know what? You want to know a prediction? I'm about to make a prediction. Ready? Homeboy's going to come back with a different name. He's out there creating his another Google account right now. So hedge pressure is the maximum order flow, the maximum change in delta of the net sum of all sold options to market makers. Essentially, it is the maximum order flow due to hedging. Weekly options are the blue, monthly options are the gold. So hedge pressure, when you touch it, is just going to be algorithms firing off. This is a real algorithm, right? This is not a colorful Crayola explosion. It's a real algorithm. These are market maker hedging algorithms that just hedge based on delta. They're long when it's positive, they're short when it's negative, long when it's in the money, short when it's out of the money. And so when you hit this line right here, there's just high volume due to the order flow bots balancing positions. So what our indicators do, unmistakably, you can go through every stream I've ever had, will predict volume before it happens and tell you the level where max hedging volume will be. So if I'm a bull, then I'm only a bull from here. And I'm betting that volume comes in and holds the market. And then when the volume starts to decline, we're on this side of hedge pressure. Okay, then maybe it's going to hold. Questions? Starting 2 Mondays from now, live trading challenge. I challenge the stock market and the futures market to a duel. Gonna take a small account, trade it up every day, live streaming. We've done it before. It's a lot of fun. You can see all the executions, ins, outs, buys, sells, all of it. Okay, any questions, you guys, today? One of my developers are messaging me. I only day trade and scalp in the morning session, from open until right about lunchtime, and I don't trade after that for day trading. Okay, oh, ooh, we have some test server updates. You guys want to see the new update before I get out of here? Actually, here's what I'm going to do. We have a bunch. Ooh, we have new updates. Okay, everybody, chop chop. Come to Discord. Really quick, free Discord, let's go. Here we go. Go there really quick. We will take a quick 15-minute break. At 11 o'clock, come back around. I will show you the new updates on the test server. Ooh. Got a new release coming out tonight with some very cool stuff. Let me let him know this really quick. My development teams are got. Oh, and see, I have to balance trading with developing. That's kind of a long process. Okay, I'll let you guys vote really quick. Okay, everyone here in chat, really quick vote. When you click pop out of the scanner, it auto minimizes and pops out a separate instance of the scanner. Now, right now, it's popping out a new instance of the platform. They fixed that in the test server, just a quickie little bug. But it minimizes the scanner, and I'm telling him I don't want it to do that. I want when you pop out, it creates a clone and leaves the original still intact, so you don't have to redo that. If you want to minimize it, you just minimize it manually. So the question is, I'll let you guys vote very quick. Minimize or no minimize? This creates a clone of this, but leaves this open. Yeah, keep it as it is, no minimize. Okay. Yeah, I agree. It works right when you popped it out. Yeah. For mine is weird. It's creating like a clone of the whole platform, where this one is supposed to do that, but it should just do an instance of the scanner itself. Yeah. So all of these that pop out should create a clone and not a full version of the platform. So maybe that's something I'm doing wrong. Okay, let's analyze the market today. Res is less than 0, so I'm looking at half gap being that resistance area right here. Are you guys, when you pop out, is it creating a separate instance of the browser too? Of the whole thing, or just the scanner? It used to be just the scanner, but it looks like a bug has crept in on the live production server. This one is supposed to create a separate instance of the entire window. These are supposed to create an instance of the module, which is here and here. So in the test server, it's fixed. Yeah, it is for you, the whole thing. Okay, yeah. So that's cool. The new test server has that whole thing fixed. So new releases in the test server. Let me see. Wait, hold on. Okay, actually, hold on. So QQQ hits the half gap line. Okay, that's it. That's the test of the resistance. So you can actually have NQ resilience as well, and have that same indication down here at the bottom for NASDAQ as well. If you care about seeing the two together, S&P is resistance, NASDAQ is resistance. I mean, all the NASDAQ stocks are just collapsing out. This is probably the high of the day. So that's it. There's no possible mechanism that I can see from here that says that this isn't a place. Now, somebody said today, like, shorting, not shorting. This tap would be where I would buy puts for there if I was directional to the downside. So with all different ways to formulate a trade, I can have my calls here in case it breaks out, sell my calls to pay for those. At this point in time, I can buy my puts here, and I could sell my puts way out of balance here. We do all kinds of setups. So this pop is where I see that opportunity there to create that downside play if I want it. Okay. Andrew trades as is, no minimize Garrett, no minimize Karen, no minimize Neff. It works right, and you popped it out. Okay, cool. Yeah, so no minimize, just to be the scanner. Okay, cool. Okay. We're done. Love you guys. Like the stream on the way out. Subscribe, Rocket Scooter free trial. I'll give you guys the link really quick. We'll talk about the test server, new stuff. We'll do a lesson today, whatever you guys want to see. We had an awesome session yesterday, didn't we? Our sessions are going to be daily, so we'll stream for a little bit, live streaming. And after we live stream, we're going to head on over to our Discord, continue today there. And then after that, we'll have a little live stream in Zoom only for members only, where I really go into meat and potatoes, train, answer your questions. Like I said, we've got so many new folks. I'm sure that y'all want to get some tutorials or get caught up. We'll walk you through as much as we can. I'm excited to see as many people as come through our ranks. I would say trust me on those little sessions. That's the best way to catch up on the last week. $193 new folks in the last month. We love all you guys. Welcome to the crew. Checking out Rocket Scooter for the first time. Let's get some training. Head over to Discord. Okay? Love you guys. See y'all in 2023. Hey, what's up, Brian? Remember, technical analysis is a thing of the past. These days, trading gurus pump and dump penny stocks. Back in the day, they pumped and dumped basic math that never worked. But you got your stock charts from a newspaper. Fibonacci's and MACDs looked kind of cool at the time. First time ever, yes, stock chart with some kind of thing on it. But let me tell you, in the modern day, Citadel and all your big market makers don't use charts. They don't use any of that crap. They use order flow algorithms that are looking at liquidity in real time. We create a platform that looks at liquidity in real time as well. Want to learn how it works? We have a free trial, rocketsphere.com. Check it out. Nominal subscription covers your data feeds, real-time data feeds, no price raise, $100 a month, all the education in the world. 15 indicators that all predict high volumes so that you yourself can make better trade plans, plan before you act, and give yourself that edge that you never thought you had from your own behavior, not relying on somebody's psychotic Crayola explosion and vomit on your chart. This is you with your own power and your own style. We love you guys. Adios.